Hey everyone, it is Evan here from thetraderisk.com, and in today's video we're going to be looking at a recent trade that we closed out in Alibaba. So we're going to be doing a quick trade review. I don't think it's going to be too long of a video unless I get off on some tangents, but I think this trade illustrates a few important points, some things that have been top of mind for me this year with respect to trading and some development and some different things that I'm looking at and working on. And again, I think this trade sort of illustrates a few of those points pretty nicely. So without further, let's jump into the trade review in Alibaba. So before we get into the actual setup, the few lessons, the takeaways here of why I'm sort of putting this together. Number one, I think this illustrates the importance of finding and sticking with leading stocks, really the sticking with leading stocks. I recently put a post out, again, this has sort of been a top of mind topic for me. Recently put a post up on finding leading stocks. We'll link it up here in the top right of the video. You can get to that article or the supplemental video where we cover leading stocks. And really, we care about them and we like to follow leading stocks because generally they remain resilient in the face of volatility and they offer opportunity beyond just a one-time setup. And I think, again, this trade review is going to start to illustrate a couple of these points here. Furthermore, or at least number two in this video of a sort of takeaway lessons is just really patience within consolidations. This is something that I've been developing on forever. I think we all probably will develop patience, and it's just a continual sort of lesson and reinforcement throughout our trading career. And I think it's always, something that, we can all sort of improve on each and every day. So these are the main high level takeaways. So let's take a look at this chart, this setup here. So this is Alibaba on a monthly chart. This is before any entries, but this is a monthly chart. It looks a little messy, looks a little weird, right? Again, you're looking at monthly bars here. So we're only looking at just over 2 years of price data. So we only have 24 candles, and these candles are pretty big. They encompass a lot of individual swings, as you can imagine, looking at a monthly chart. But overall, notice we are heading from the lower left to the upper right on this chart. That pink arrow there just sort of says, we're in a general uptrend here. If we want to get specific, we had a bit of a double bottom there coming into 2016 in February, right around that $60 level. And then since that point, we rallied up to that upper trend line and we broke out very strongly in April. In August of 2016, we saw that big run up to about 106, and then we pulled back into the end of the year. We retested that $85 breakout, and coming into 2017, we saw that surge to the upside. So what got my attention with Alibaba here was really that double bottom from February all the way to, essentially all of 2016. We went from about $60 low in price all the way up to $105, $106 in price. This is a large cap stock. That's 70% gain. That's something that has my attention. That's not retail traders piling into Alibaba, moving it. That's institutional. That's a secular trend or a bigger piece at work here, a bigger move at work, and that's a leading stock in general at a very high level of something that I want to at least pay attention to. And once we came into 2017 with that sharp bounce higher after January, that's when it started to get really close back on my radar to look for a setup into it. So that's the big picture of Alibaba. Let's zoom down here. This was the first setup that I started to really pay attention to, as I say, in this consolidation, really at the beginning of February, end of January, as we had that gap up and move up to over $100 again. That's when it started paying attention to it. And really, there was a lot of patience just executing and just watching this sideways consolidation kind of take place and happen. And this pink arrow, the very last bar there, was the first signal that I saw that would make me want to jump in here and buy some of the stock for a swing trade. For me, this is a reversal off of support, kind of retesting this breakout zone. You got the 20 period right underneath us. You got that trend line of support. It's a great place, in my opinion, the way I strategize and the way I form my strategies to get long this with a fairly tight stop. I think 102 can work with an entry of 106, and I think you can participate in a trend in a leading stock to the upside. That's a favorable risk to reward entry point, again, from my perspective. The previous day, of course, that bearish engulfing bar is not too pretty, but it didn't get follow through. So, there's a lot of ways. This isn't necessarily a video on strategy, and you guys can certainly disagree on entry points and everything like that. So that was the first entry. The issue I had with this entry and why I did not take Alibaba here is because this right here, this is the S&P 500, and if you notice, the day before we had that very loud, outsized, bearish expansion bar to the downside, 2 multi-week lows. That is a red flag for me, because I am sort of a top-down. I'm always looking at what the market is doing, and given that sort of loud behavior, bearish action to the downside, coupled with the fact probably had some positions on at this point, not looking to increase overall exposure. So as much as I may have liked that setup there in Alibaba, I wouldn't take it because of the increased exposure it would give me in a market environment that was a bit uncertain at this time, given the amount of other positions that we had on. So Alibaba, unfortunately, was a pass for me at that point. Now, as it would happen, there goes Alibaba the next day, saw some strong follow through, and of course that's me saying, damn, I wish I took that entry, but hindsight's 2020, could have easily gone the other way. The point here is, and this is the very important, one of the key kind of takeaways here, is not to drop Alibaba off your radar. I know even, 2 years ago, last year, 6 months ago probably, this is a sort of situation where I would put this stock away and just kind of forget about it and move on to, other movers and other types of names out there. That's fine. It's a process. It can work. But for me, again, the scope of this video and one of the takeaways and one of the things that I've been working on is just making sure we continue to watch these types of names, because as we talked about in the top of the video, these generally offer multiple setups while they continue to lead in that sort of secular long-term trend. So that's exactly what we did. We continued to pay attention to Alibaba. This was it about 5 days ago, 5 days after that initial entry that we did not take, or that initial setup we didn't take. Still nothing interesting. Still, it's not providing any clean setup in the way, certainly the way I look at things. It's still leading, but again, it's just kind of going there without me. Here's about 5 days later now, so about 10 days later from the initial setup, and now it's starting to get a little bit interesting here, starting to pull back over. Again, maybe looking slightly concerning there, just the fact that we kind of pushed higher to those new highs and then kind of failed, but just a lot of chop. And now if we zoom out a few days after that, this is an interesting day to me. This is a day where we did go sideways for 3 or 4 days there after pulling off of those highs. We tried to break below that 107 area, that 20-period moving average. We reversed and we closed strongly on the day. That is an entry for me, very similar to that first setup that I did not take. That's what this looks like. It's a few points higher, but guess what? That's the price we have to pay for kind of skipping on that entry, but for still getting involved in a pretty tight risk-adjusted manner and position, I think this sets up nicely. Again, right underneath the 20, we have that 20-period support. We've got that little bit of a reversal here staged today. We have that trend line. We could extend higher. So again, a stop around 105, 104. I think you can play it very tight, and once again, still continue in a leading stock. So that was our entry at 109 on the dot, right at the close of the day, near the close of the day. Here's the very next day, got that strong follow-through, exciting follow-through day, just like almost like we looked at that very first setup time where we skipped that setup, but getting that strong follow-through. Did not do anything that day, just kind of sat with it, liked it. I tend to take profits into strength, into moves like this, but a day one sort of follow through, it's a little too soon to start to harvest profits out of there, so we just wait. And this consolidation forms here, 5 days, getting pretty tight, lots of overlapping, markets doing things, right? Momentum slowing. I remember posting this chart and people, having some opinions on the other side saying, well, Alibaba, the momentum's slowing down. It looks like it's going to roll over here, and you know, having that sort of glass half empty view, and that's fine. It could have, but it didn't. It ended up working itself higher. That's the hint to the next slide. But I think the key here is just staying patient in these little consolidations, especially when you know the sort of behavior of the stock. Let's take a look. I mean, just look at this chart here and understand that Alibaba likes to sort of take its time. It's breaking out, it's acting well technically, it's holding key levels, and then it moves sideways. So it has those 1 or 2 day pops, and then it moves sideways, and then it continues higher. So until we see an actual change of trend here, or it gets really extended to the upside, it's one of those two, that's generally what I'm looking for. So here is the very next day. We got that nice push through this pattern here, and that was the first point at which we sold 40% of this trade-off, 113.25, towards the highs of the day. But the key is just extending away from some of those moving averages, coming closer to earnings time for Alibaba, and just kind of getting a little bit extended here. We know, that this certainly likes to kind of move sideways, as we discussed, after it moves higher. And again, of course, as this continues to move higher, has a more likelihood of eventually pulling back in a more meaningful way. But taking some risk off the table, 113.25, and continuing to raise our stop at this point. Here's the very next, actually 2 days after, we had again a little quiet day after we took profits, and then it started to really extend itself. So now we're starting to see a little bit of a frothy kind of move here. Hasn't gotten too far extended. It doesn't like getting too far extended away from that 8-period moving average, and you can see just continuing to sort of harvest gains there as it gets really extended, and then flash forward about a week or so later, consolidates, pushes higher again, and then taking the rest of that off at 117. So again, you may not like the way the trade is managed or agree with it. That's sort of our process and the way we look to harvest those gains as it gets extended. And again, coming into earnings time, it's something that we look to sort of scale out of ahead of time. So that was the trade in Alibaba altogether. The takeaways once again here, keep a watch on winning names. Chances are they'll keep winning, and that means sometimes you're going to have to pay up, right? That's the price, that's the cost of trading. If you're going to skip an entry, if you're not going to take it and jump on, when it doesn't have a perfect sort of setup for you, chances are you're going to have to pay up a little bit to get that primary setup. Don't be afraid of it if everything else is sort of working in your favor. And then finally, staying patient in consolidations. Look, I think this is something, again, we all have to work on in different respects, either not pulling the trigger to get into a trade or not getting out of a trade until you get your, until your rules sort of tell you that you should be out of a trade, until you have clear reasons to sort of exit there. And finally, not all trades will be this generous. I'm not trying to cherry pick this trade to say this is how, everything is here. I'm not, making this into a sales pitch. I think this is very much a good sort of tactical lesson here. A couple of takeaways. We have plenty of losing trades. They're not all like this, but I think this illustrates just a handful of different points. So all in all, I hope this video has been helpful. If you guys have questions, general areas on how to contact me on Twitter, StockTwits, my website, YouTube channel here, of course, and then there is my email. So thanks guys for watching. Hope this helps, and have a great day.